Gold, silver, and platinum, the trifecta of precious metals. Recently, the demand for precious metals like gold, silver, and platinum has been rising. Some people see that as a signal to go all in. I think it's a sign that they deserve a place in our portfolio as an insurance policy. So, without overcomplicating things, I would just deliberate on the top three metals: gold, silver, and platinum. For gold, for thousands of years in multiple cultures, gold has been seen as a store of value, also known as money. The reason for this is that gold had the right balance of scarcity, durability, and difficulty to counterfeit due to its unique density. It's also generally seen as a hedge against inflation and currency risks. For silver, the story is similar to that of gold, but it also has a utility as an industrial metal, used heavily in electric vehicles and in solar panels. Finally, for platinum, it was never seen as a store of value unlike silver and gold, but it does have industrial demand as it's used heavily in catalytic converters. The main reason why these three metals are known as precious metals is because they struck the right balance of scarcity and historical relevance so that they could be used as a store of value. So the next question you might ask is, how much of these metals actually exist? The answer is there's about 210,000 tons of gold, 1.7 million tons of silver, and about 8 to 9,000 tons of platinum. So as you can see, platinum is about 23 times rarer than gold, and gold is about 8 times rarer than silver. So now let's talk about how these precious metals perform as investments. Gold averages about 4 to 5% per year for 30 years, outperforming inflation but underperforming stocks. Silver, on the other hand, gives about 4 to 5% performance, tracking inflation. Finally, platinum performed the worst, and it is mostly used as an industrial metal for catalytic converters, which the world has slowly transitioned away from due to electric vehicles. Therefore, compared to the stock market, which gives approximately 8 to 10% returns, precious metals lags heavily behind. Taking gold for example, which has a market capitalization of about 35 trillion, in order for you to double your money, you would need another $35 trillion to be invested in the gold market to see your money double. But now let's also talk about the correlation with other investment vehicles that precious metals have. Generally, all the precious metals are heavily correlated together, with gold having a correlation with the stock market between 0 to negative 0.2, and with bonds basically 0, and real estate between 0.1 to 0.3. So with USD, which is highly negative correlation, and with inflation, which has a very strong positive correlation. So what does that all mean? That means gold and other precious metals are not very correlated with most other assets, with a strong negative correlation with the US dollar, meaning that if inflation does continue to rise, then you should see the prices of your precious metals to also rise with it. My take is that everyone should invest in precious metals. And why I think this way is that, number one, it's basically never a bad idea to diversify. So as you can see from the earlier correlation graphs, it basically doesn't correlate with any of the main asset classes from stocks, bonds, and real estate. So by investing in precious metals, you are basically heavily diversifying your portfolio. Also, at this point, inflation is basically guaranteed in America. In fact, the Federal Reserve aims to at least have 2% inflation because the central banks want America to keep spending, as that is what allows our country economy to run. This means that the system is built around a slow and steady price increases, and as we can see from the inflation correlation, it's positively correlated, so investing in some precious metals means that you are basically saving your money against inflation.